People are always asking me, how do you predict the next breakout trend? How do you catch that big move before everyone else sees it? And I always smile, because that's the wrong question to begin with. You don't predict the market. You don't sit there with a crystal ball and try to divine what's coming tomorrow morning. What you do is recognize conditions that tell you when the market is preparing to move. That's all you can ever really do. And if you think you can outguess the tape, you'll be ruined sooner or later. Tell me, haven't you seen traders blow up because they were so sure the market would do what they expected? The first thing you have to understand is this price is never random. It moves because of forces, real forces, that push it along like the wind carries a ship. Those forces are supply and demand, fear and greed, money flowing in and money flowing out. And when those forces build up long enough without release, you get a breakout. Think of it like a boiler. Pressure builds and builds and builds. At some point it must let out the steam. Now, do you want to be the fellow who waits until after the boiler has burst and all the noise has frightened the crowd? Or do you want to be the fellow who saw the pressure mounting and positioned himself before the explosion? Most people wait. They need to see it to believe it. They buy after the breakout has already run, and they sell after the breakdown has already dropped. They let their emotions dictate their trades. But the operator who survives, he doesn't wait for confirmation from the crowd. He watches the tape, he reads the action, he listens to what the market is whispering before it shouts. Haven't you noticed how the market always tips its hand, if only for a moment, before it makes a big move? Now, I'll tell you something. In my early years, I used to think that if I could just memorize enough patterns, I'd have the secret. I'd sit with my notebook, drawing formations, triangles, flags, cups, whatever they call them nowadays. But it wasn't the shape itself that mattered. It was the psychology behind it. Why does a stock form a tight range? Because buyers and sellers are fighting for control, and neither side has the upper hand. Why does volume dry up? Because the weak hands are gone, waiting for something to happen. And when that balance finally tips, the move begins. Isn't it obvious once you think of it that way? Let me give you an example. Suppose a stock has been climbing steadily, stair-step fashion, and then it stops. It doesn't collapse, doesn't reverse hard, but it just sits there, trading in a narrow band. The amateurs get bored. They say, "This thing isn't going anywhere, I'm out." But I see that as potential, because strong stocks rest before they continue, and weak stocks break down. The trick is to distinguish one from the other. That's where patience comes in. Do you have the patience to sit and watch a stock that does nothing, waiting for the moment when it does everything? A breakout is never an accident. It's the natural result of pressure building up in the market. If you pay attention to the tape, you'll see the footprints, the big orders stepping in quietly, the support holding firm, the way the stock refuses to go down even when the market is weak. Those are the clues. That's the market tipping its hand. But most traders are too busy chasing the action elsewhere, looking for excitement. Tell me, haven't you ever sold a quiet stock only to watch it take off without you the next week? There's another point, and I want you to listen carefully. Breakouts only matter in the direction of the trend. I've seen too many traders try to catch a bottom, calling a reversal as if they were fortune tellers. They see a stock that's been falling for months, and they tell themselves it must bounce. And when it does bounce, they shout, "See, I knew it," but then it rolls over and sinks to new lows. That wasn't a breakout, that was a trap. The real money is always in line with the path of least resistance. If a stock has been trending higher and then tightens up, you watch for the breakout upward. If it has been sliding lower and then forms a base, you watch for the breakdown downward. Isn't it foolish to swim against the tide when the current is so strong? Now, don't misunderstand me. Recognizing a breakout isn't the same as trading it well. I've known traders who spotted the right move but lost money anyway. Why? Because they rushed in too early or they waited too long. Timing is everything. The best breakout trades are entered at the precise moment the market confirms the pressure has been released. Not before, not after. That means you don't guess. You don't anticipate. You prepare. You watch. And when the signal comes, you act without hesitation. Can you do that, or will you second-guess yourself and miss the chance? I'll tell you the hardest part: sitting still. Most people think trading is all action, pushing buttons, buying and selling all day long. But the real skill is waiting. You might study a stock for weeks, even months, before the right moment comes. And when it does, you strike. But all that time in between, you sit, you watch, you keep your money safe. It's like a hunter waiting in the brush. The prey doesn't come out because you want it to. It comes out when it's ready. How many times have you taken a trade out of boredom, only to regret it? Another thing I've learned when the breakout comes: it must be obvious. Obvious not to you, but to the whole market. The volume surges. The price clears resistance cleanly. The stock doesn't hesitate or stumble. It just goes, and the crowd rushes in, pushing it further. That's when you ride the wave. But if you have to squint at the chart to convince yourself it's a breakout, then it isn't one. Haven't you ever forced a setup, only to realize afterward that you were just seeing what you wanted to see? What makes the big difference is discipline. You can know all about breakouts, trends, supply and demand, but if you lack discipline, the knowledge won't save you. Because the market will tempt you every day. It will show you near breakouts, fake moves, head fakes, noise. And if you bite every time, you'll bleed slowly until you're finished. Discipline means you wait for the right conditions, and when they come, you act big. That's how you make money. 1 or 2 big moves a year can pay for all the waiting, all the false starts, all the mistakes. But you must be there, ready and willing. Isn't that what separates the speculator from the gambler? I want to talk about risk for a moment. People get excited when they see a breakout, and they forget that even the best-looking move can fail. A breakout without follow-through is a trap, and it will catch the eager every time. That's why you never risk more than you can afford to lose. You place your stop where the trade proves you wrong. If the breakout is real, it will never come back to stop you out. If it does, then you are wrong, and you take your small loss. But too many traders hold and hope. They think it'll come back. And maybe it does once or twice, but eventually, the big one comes along and it doesn't come back, and then it's all gone. Haven't you seen that happen? Here's something else. The best breakouts come when the general market is in your favor. You can find a beautiful setup, but if the whole market is weak, you're fighting against the tide. The greatest trends always ride on the back of a strong market wave. So you don't just study your stock, you study the whole market. You read the tape of the averages. You look for strength or weakness in the broad trend. Because no stock stands alone for long. Don't you think it's easier to sail when the wind is at your back instead of in your face? People ask me if there's a secret indicator, some hidden formula that reveals the next breakout. I tell them the only indicator that matters is price and volume. Everything else is just noise. Price tells you what the stock is doing. Volume tells you who is behind it. When price breaks out on heavy volume, you know the big money is moving. And when the big money moves, it drags everything with it. You can't fight it. You just join it. That's the real secret. Don't you find it strange how traders complicate things with fancy tools when the truth is right there in the tape? Now, don't think for a moment that predicting breakouts means you'll catch every one. You won't. Sometimes you'll miss them. Sometimes you'll get shaken out. Sometimes the market will fool you. But you don't need them all. You only need the big ones. The ones that pay for everything else. And those big ones, they don't come along every day. That's why you have to be patient. Why you have to wait. Why you have to train yourself to see clearly without bias. Because when the big one comes, it changes everything. Haven't you noticed how a single stock can go from obscurity to a household name in just one breakout trend? Let me tell you something about human nature. The crowd never changes. 100 years ago, they panicked and rushed just the same as they do today. They chase tops, they dump bottoms, they follow the noise. That's why the same principles still work. Because you're not trading numbers on a screen, you're trading human behavior. When you learn to see that, the chart becomes more than lines. It becomes a story. The story of fear, greed, hope, despair. And every breakout is just another chapter in that story. Do you see it that way, or do you still see only patterns? The funny thing is, the moment you think you've mastered it, the market will humble you. It'll throw a false breakout at you, lure you in, and then slam you down. And if you let your ego get in the way, you'll double down and lose everything. The market doesn't care who you are. It doesn't care how smart you think you are. It rewards discipline and punishes arrogance. That's why the best traders never boast. They know they're only as good as their last trade. Have you ever felt that sting of overconfidence when the market teaches you a costly lesson? The way to survive, the way to thrive, is to approach every breakout with humility. You recognize the setup, you take the trade, you manage your risk, and you let the market do the rest. If it goes your way, you ride it as far as it'll take you. If it doesn't, you get out quick. Simple as that. But most people can't keep it simple. They overthink, they overtrade, they overstay. And the market takes back what it gave them. Why make it so hard when the path is clear? I've spent my life watching markets, and I can tell you with certainty, the next breakout trend is always forming somewhere. The only question is whether you'll see it, and whether you'll be ready when it comes. The clues are there in the price action, in the volume, in the market tone. But you have to be looking with a clear mind, free from bias, free from emotion. Because the market doesn't care about your hopes. It doesn't care about your fears. It only cares about supply and demand. Haven't you felt how liberating it is when you stop trying to outguess the market and just follow the tape? Now, let's go a little deeper into how you spot those pressure points before the breakout. You'll notice that strong stocks don't just break out from anywhere. They usually do it from a base. A base is a period of consolidation where the stock builds strength. The longer the base, the bigger the move when it breaks out. It's like coiling a spring. The more you compress it, the farther it jumps when you release it. So when you see a stock building a long, tight base, you pay attention. Because when it goes, it won't creep, it'll leap. Don't you find it remarkable how often the biggest winners had the longest, quietest bases beforehand? But you can't just buy because it's in a base. You have to wait for the breakout. The breakout is your signal. Until then, it's just potential. I've seen traders buy too early, convinced they're smart enough to get ahead of the move. And sometimes they're right. But more often, the stock dips. They get shaken out, and then it breaks out without them. They tried to be smarter than the market, and the market punished them. Isn't patience cheaper than being too early? Volume is your confirmation. A breakout without volume is like a fire without heat, it won't last. But when you see price clearing resistance with a surge in volume, that's when you know the big money is stepping in. Institutions, funds, operators, they're the ones who move stocks, not you or me. And when they commit, you want to ride with them. Haven't you noticed how the real trends always have volume behind them? Sometimes the breakout happens on news. A strong earnings report, a new product, a big contract. The crowd rushes in, and the stock explodes higher. But don't be fooled, the news is just the excuse. The real move was already building in the tape. The stock was already strong, already under accumulation. The news just lit the fuse. That's why you don't need the news. You need the tape. The tape tells you before the news does. Haven't you seen a stock rally on bad news or sink on good news? Simply because the trend was stronger than the headline. The hardest part, and I'll repeat it because it's so important, is sitting tight. When you've got the right stock, in the right trend, breaking out at the right moment, you don't fidget. You don't sell at the first tick against you. You sit. You hold. You let the market do the heavy lifting. Because the big money is always made in the big swing, not the little wiggles. That's the difference between trading for a quick buck and trading like an operator. Do you have the stomach to sit through the normal shakeouts and let your profits grow? I've seen too many men take small profits and big losses. They clip their winners short and let their losers run. That's backwards. You should cut your losses quick and let your winners ride. A breakout trend is your chance to make a fortune if you have the courage to hold it. But if you keep selling for crumbs, you'll never feast. Isn't it ironic how fear makes men sell the right trades and hold the wrong ones? And remember, every breakout has its end. Nothing goes up forever. The same way you spot the beginning, you must watch for the signs of exhaustion. Volume drying up on the rallies, heavier selling on the declines, failure to make new highs. Those are the warnings. That's when you tighten your stop, protect your profits, and prepare for the next opportunity. Because the market is a cycle of breakouts and breakdowns, booms and busts. Do you see it as a cycle, or are you still chasing each move as if it were the last? So when you ask me how to predict the next breakout trend, I tell you it's not prediction, it's preparation. You study the tape, you study the market, you recognize the conditions. You wait for the pressure to build, you wait for the release, and then you act. And if you're wrong, you get out quick. If you're right, you hold on for all it's worth. That's the game. That's all there is to it. The rest is just noise. And right now, as I speak to you, somewhere out there in the market, a stock is coiling tight, building pressure, waiting for the moment when it'll break free. The tape will show you the clues, if you're watching carefully. The question is, will you be ready when it does? Discipline. That's the word that separates the men who last in this game from the ones who are chewed up and spit out by the market. Everybody wants to know the trick, the hidden formula, the magic signal that'll point them to the next fortune. But the truth is, all the rules, all the methods, all the setups are useless without discipline. Because what good is knowing the right play if you can't bring yourself to execute it the right way? Haven't you seen fellows who can talk charts and patterns all day, but when the bell rings, they act like gamblers at a racetrack? Think about it. The market is designed to test you, to pull at every weakness in your character. It will tempt you to chase when you should wait. It will lure you to hold when you should cut. It will tease you with little profits, daring you to grab them just before the big move you'd been waiting for finally begins. And if you don't have discipline, you'll fall for every trick. Do you know why? Because the market isn't just numbers, it's a mirror of your own emotions. Now, most men believe discipline means tightening your belt, grinding your teeth, and forcing yourself to follow rules you don't believe in. That's not it at all. True discipline comes from knowing exactly what your method is, believing in it through experience, and having the patience to wait for the conditions you know are right. It's not about willpower, it's about conviction. But conviction only comes from testing yourself in the market over and over until you know the truth of it. Haven't you noticed how the traders who survive the longest aren't the loud ones shouting about their wins, but the quiet ones who stick to their plan like clockwork? Let me tell you a story. I've watched many a man get rich quick on a hot streak. Maybe they caught a wild bull market, maybe they got lucky with a big bet. They make money so fast their heads spin, and then, flush with confidence, they forget discipline. They double down, they start breaking their own rules. They think the market has blessed them with some special genius. And then the tide turns, the inevitable shakeout comes, and in 1 or 2 trades, they give back everything. You see, the market will let you win without discipline for a little while, but it won't let you keep those winnings. Haven't you seen how fast easy money disappears? Discipline means cutting your losses without hesitation. That's the hardest act in speculation, because it feels like admitting you were wrong. But every man is wrong sometimes. Even the best operator in the world is wrong plenty. The difference is, the disciplined trader knows being wrong small is just part of the business. He takes the small hit and lives to fight another day. The undisciplined one lets pride get in the way, holds on, averages down, and turns a scratch into a disaster. Which one are you? And discipline isn't just about losses, it's about holding your winners too. The crowd loves to grab a quick profit, take the small gain and feel clever. They tell themselves, I'll lock it in before it slips away. But the real money is made by sitting tight in the right trade. The disciplined trader waits for the move to unfold, for the trend to play itself out. He doesn't sell just because he's nervous or because the price dips for a day. He knows the difference between normal fluctuations and a true change of character. That knowledge is useless without discipline to act on it. Haven't you ever sold too early, only to watch the stock double after you were out? Discipline also means waiting. The best trades don't appear every day. Sometimes the market is messy, uncertain, noisy. The amateurs force trades out of boredom. They say, I have to do something. But the disciplined trader knows he only has to act when the market gives him a fat pitch. Until then, his capital stays safe. He waits, he studies, he watches. The hardest work in speculation is doing nothing. But that nothing is what saves you and sets you up for the big strike. Can you sit idle when the market gives no signal, or do you jump in just to feel alive? Then there's discipline in size. A trader without discipline bets too big when he feels good, too small when he feels scared. He lets his emotions decide his risk. But the disciplined man has rules for size. He risks a set portion, not too much, not too little. He knows that survival comes before profits, and survival depends on never risking ruin. A single bad trade shouldn't put him out of the game. That's why discipline in size is so vital. Haven't you noticed how greed makes men reckless right before the market humbles them? And don't forget discipline in studying the tape. Most traders glance at a chart, convince themselves of a story and jump in. The disciplined operator studies, compares, waits for multiple signs to align. He doesn't marry his opinion, he tests it against the market's action every day. If the action changes, he changes. He's not stubborn. That's discipline too. Flexibility is a form of discipline, because it's easier to cling to your idea than to admit the market has proven you wrong. But the market is always right. Isn't it strange how many traders would rather lose money than admit they were mistaken? There's another kind of discipline that nobody talks about: emotional discipline. You can have rules written on paper, but if your nerves can't handle the heat, you'll break them. Discipline means training yourself to stay calm when others panic, to stay patient when others rush, to stay humble when others boast. The tape will test your nerves every day. It will shake you, taunt you, exhaust you. The man without emotional discipline will always fold at the wrong moment. Haven't you felt your heart race during a wild swing, urging you to act when you should have stood still? Discipline is also about simplicity. The crowd clutters their minds with a dozen indicators, 100 opinions, endless noise. They confuse themselves until they see signals everywhere. The disciplined trader cuts it down to what matters: price, volume, trend. He ignores the rest. He knows that more information doesn't mean better decisions, it just means more excuses. Simplicity takes discipline, because it's tempting to believe the answer lies in some complicated formula. But the truth is, the more you strip away, the clearer the picture becomes. Do you see how the amateurs drown themselves in data while missing the obvious? Above all, discipline is the only real edge you can count on. Markets change, setups evolve, conditions shift. But discipline never goes out of style. It's what keeps you in the game when everyone else is wiped out. It's what allows you to capitalize on the big moves when they come. Without it, you're just another gambler with a short lifespan. With it, you have a fighting chance to build something lasting. And the funny thing is, most men know this. They nod their heads when you tell them discipline is key. But knowing isn't enough. The test comes in the heat of the moment, when the market moves against you, or when profits tempt you. That's when your discipline shows or fails. And I'll tell you, this discipline isn't something you master once and keep forever. It's a battle you fight every day. Every trade is a chance to slip, to break your rules, to let emotion take the wheel. You have to renew your discipline constantly, like sharpening a blade. One lapse can undo months of good work. The market is relentless that way. It doesn't forgive weakness. Haven't you noticed how one careless trade always feels bigger than 10 careful ones? So when I say discipline is the only edge that survives every market cycle, I mean it. Methods may change, tools may evolve, but discipline endures. Without it, you're doomed to repeat the same mistakes. With it, you give yourself the chance to stand apart from the crowd, to survive long enough for fortune to favor you. But only if you can live it, not just preach it. Because in this game, it's not what you say, it's what you do. When the tape puts you to the test, patience pays, boredom kills accounts. That's a truth as certain as the sun rising tomorrow. The market has a way of making a man restless, making him feel that he must always be doing something, always trading, always moving his money around. But the irony is, the best trades are often born out of long waiting, not constant action. Haven't you noticed how the fellows who trade every hour of every day are the ones who always seem short on capital when the real opportunity finally shows up? You see, speculation isn't about action, it's about timing. And timing is about patience. The crowd doesn't understand that. They want excitement, they want the thrill of buying and selling. They treat the market like a gambling hall, a place to find entertainment. But this isn't entertainment. This is war. And in war, you don't waste your ammunition shooting at shadows. You wait, you watch, and you strike when the enemy exposes himself. Isn't it true that a soldier who fires too soon or too often finds himself out of bullets when the real battle begins? Most traders fail not because they can't read a chart or because they don't know about breakouts or trends, but because they don't have the patience to wait for the market to align with their plan. They see a setup that almost fits, and they convince themselves it's good enough. They act out of boredom because sitting still feels unbearable, and the result is always the same: small losses, wasted energy, a drained account, all because they couldn't stand the silence between real opportunities. Haven't you ever taken a trade just to keep busy, only to watch it chip away at your account while the trade you should have waited for passes you by? Patience isn't glamorous. Nobody brags about the days or weeks they sat on their hands, doing nothing while the market chopped around. But that's the work of a true operator. To wait with discipline, to let the crowd exhaust itself chasing every wiggle, while you conserve your strength for the moment when the tape speaks clearly. Patience means being content to let 100 mediocre trades go by in order to catch the one that matters. Can you resist the urge to act, to gamble, when the market gives you nothing but noise? And boredom, that's the killer. Boredom makes men reckless. They start fiddling with small trades, convincing themselves they're keeping sharp when really they're just feeding the market. They start looking for reasons to enter, twisting charts and inventing signals. They say, it looks good enough, but good enough isn't good enough in speculation. Only the best setups, the clearest breakouts, the strongest signals are worth risking your money. Everything else is just temptation. Haven't you noticed how boredom always whispers, just one trade won't hurt, right before it turns into a string of losses? I've seen boredom ruin fortunes. Men who had the skill, who knew the game, but who couldn't stand waiting. They'd rack up small losses out of impatience. Then, when the real move came, they either had no money left to take it, or they were too demoralized to see it through. The market demands patience, but it doesn't hand it out freely. It tests you. It lulls you into a trance, makes you feel like nothing will ever happen again. And then, when you least expect it, the breakout comes. Only the patient man is ready. Do you see why waiting is harder than pulling the trigger? Patience also means letting trades develop. Too many sell the moment a trade shows them a small profit, as if they were starving for crumbs. They waited long enough to get in, but not long enough to reap the rewards. The real profits take time. A breakout trend doesn't unfold in a day. It needs weeks, sometimes months, to deliver its full potential. Patience means holding through the small dips, the shakeouts, the noise, and trusting your plan. Haven't you seen traders exit a stock for a quick 5%, only to watch it run 100% without them? The market rewards those who can do less, not more. That sounds strange, doesn't it? But it's the truth. The fewer trades you take, the more selective you become, and the better your odds of hitting the big one. The man who trades every day has no patience. He spreads himself thin, chasing every idea. The man with patience may take only a handful of trades a year, but those trades, chosen carefully, can make his fortune. Isn't it remarkable how the busiest traders are often the poorest, while the patient ones quietly accumulate wealth? Patience means enduring discomfort. The waiting is painful. You'll feel doubt creeping in. You'll feel like you're missing out while others are busy trading. You'll be tempted to abandon your plan and jump at scraps. That's when patience is hardest. But that's also when it pays most. Because while the crowd is busy burning itself out, you're preserving yourself for the real opportunity. Haven't you noticed how the best setups always appear right after the crowd has lost interest? Boredom is nothing more than your ego demanding entertainment. The disciplined trader ignores it. He knows his edge doesn't come from activity, it comes from precision. He waits for the exact setup, the clean breakout, the perfect alignment. Then, and only then, he acts. Every trade before that is a tax paid to boredom, and boredom charges interest. How many accounts have you seen drained not by one bad trade, but by 100 little ones, born out of restlessness? Patience isn't passive. It's not sitting idly with your eyes closed. It's active observation. It's studying the tape, watching the price action, noting the accumulation, the drying up of supply, the tightening of ranges. It's preparation.